On January 3rd, the Office of the Comptroller of Currency, the Federal Reserve, and the FDIC issued a joint statement reiterating to banks the things they need to be aware of if they're going to be engaging with the crypto space. And I think the list of things that are highlighted in this statement really kind of give you a little bit of insight into how these regulators are interpreting crypto right now. They warn of like the obvious things, like there's a risk of fraud and scams, that there are legal uncertainties related to custody and ownership. But they also say and warn these companies that some of these crypto companies who are using them are making inaccurate public statements about FDIC insurance, and that the banks who are serving them need to be aware of that. They also reiterate that, like, any banks that are holding assets for stablecoins need to be aware that stablecoins as a structure may be vulnerable to a run, which can lead to a huge outflow in deposits from the bank that's holding the stablecoins assets. They also then reiterate that there is a large contagion risk in the ecosystem because of how interrelated these entities are and how much is shared between these different cryptocurrency companies. And one of the things that I really want to bring attention to that they say is that they basically tell them that engaging with cryptocurrencies that are on public blockchains is not going to be appropriate. They say issuing or holding as principal crypto assets that are issued, stored, or transferred on an open, public, and/or decentralized network is highly likely to be inconsistent with safe and sound banking practices. They are telling these banks they should not be holding cryptocurrencies, and they are really emphasizing that. And then they go on to specifically say the agencies have significant safety and soundness concerns with banking models that are concentrated in crypto asset related activities. That's Silvergate and Signature.